This is Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wojacek from Trend Spider. We have a
breaking news. What is up, everybody? Happy Tuesday. Welcome back to another episode of Benzinga Live. I'm your host, producer AB. We've got a packed show today. Here in about 10 minutes, my man Rod Alzmann will be joining us. Of course, one of the key figures behind the GameStop short squeeze, which happened 2 years ago. He ran GME, or still runs, I believe, GMEDD.com, as well as talks about other stocks. We'll be catching up with Rod, see what he's been watching. And then at noon, an interview I'm really excited about as well is Tom Grant going to be joining us from Apptopia. Apptopia is an interesting company that collects alternative data from mobile apps. So Tom's going to join us to talk about Snapchat's earnings today. Snapchat reports earnings after the close. We can check out Snapchat, but we'll be talking to Tom about that. Maybe we'll hit on a couple other companies too, not sure. And then we will keep it ticking from there. At 12:15, we will have on Austin Bouley, the impeccable investor. Talk to Austin at 12:15, see what he's been up to. So that's in about 40 minutes from now. And then 12:45 p.m. Eastern, we'll be bringing on Clinton from Crypto Tax Audit, talking about how to do your taxes for crypto. So like I said on the top, packed show today. Let's check in on the S&P 500, see how we're holding up. Boom! Looks like we are pushing to make highs of the day. We're looking at the 5-minute chart here. SPY right around 403.50. Again, the high of the day so far. Looks like we got up to, let's see, 403.49. We're at 403.40 right now. 403.53 looks like technically your high of the day. So about 13 cents, 10 cents away now off the high of the day. I'd be watching, if I'm trading this intraday, watching to see if we do break a new high. And if we do, kind of, just see if we can keep it rolling from there. But if we top out here, maybe see about looking at it on the short side. But let's take a look at some companies that have reported earnings so far. Good morning, The Crow. We can only say, at least, I don't know where y'all are joining from. If you guys want to do that, it could be fun in the chat to just drop, you don't have to drop your exact address or your exact longitude and latitude, locations. If you want to, I don't know. I know Twitter now has serious rules against doxing live locations. I don't know about Google or YouTube's. You don't have to do that though, but I would like to know, I'm in Detroit, Michigan. I mean, if you guys want to say you're in San Diego or you're in, Tampa, Florida, wherever you are, drop it in the chat if you'd like to. South Carolina. What up, Cheryl from South Carolina? I was going to say here on the East Coast, how I got on this tangent was here on the East Coast, or not East Coast, but here on the Eastern time zone, I should say we can only say good morning for about 20 more minutes. So good for the Crow to get that in there. I'm going to get out in front of that before I hear people either here in the office or in the chat saying I'm not on the East Coast. I know that. I meant Eastern time zone. I just say things wrong sometimes. Cave Creek, Arizona. That sounds nice. Maybe I got to get out there and play some golf with you, Jay, because ain't no golfing happening here in Detroit right now. It's about 10 degrees. Salem, Oregon. All right, so we've got Oregon, Canada, Arizona, Virginia, Toronto, South Carolina, all in the chat. Woo! All right, let's check back in on SPY real quick. All right, so coming off that HOD high a day a little bit here, but we'll keep watching the SPY, see what's going there. I was gonna say let's take a look at some companies that reported earnings. Since I'm in Detroit, let's start with GM. General Motors this morning, stock is up nearly 8%. Just an absolute, you might say, okay, Aaron, 8%. So what? Tesla moves 8% every day. Well, GM ain't Tesla. 8% for GM. That's like a, 100% move for most stocks. This thing usually doesn't move that much, in terms of just big big day-to-day moves. So seeing it up 8% after the company announced Better than expected earnings all around this morning. And then you had the CEO come out, and we'll take a look here in our Benzinga Pro news feed here. If you haven't checked out Benzinga Pro, pro.benzinga.com for a free 2-week trial. You don't even need to put in a credit card or anything. So no reason not to try it out. I use it literally every single day. But you can see here all these headlines coming out this morning before the open. The CEO came out, Mary Barra came out and said she expects basically a breakout year. So basically everyone else is like talking about a recession this, recession that, people aren't spending as much money, interest rates are higher, Jerome Powell's crushing the market, whatever. And then GM comes out and says, no, we're expecting a really good year. We're expecting a breakout year. And so to hear that in this environment, I think not only bodes well for GM and other car companies, but really, and I don't want to extrapolate too much from, one company's earnings or what one company is saying, but I would like to think that, people buying cars is kind of a barometer for how the consumer's doing, right? If people are all, if the overall economy is getting hit and people don't have as much money to spend, you would think that correlate with less cars being bought, less trucks being bought. And GM's basically saying that the company expects the opposite this year. They expect to sell, a decent amount of cars. They're doing all right. And I think that bodes well. Again, not just for the car company, but for the overall economy. Because an environment where people are buying cars, where people are buying trucks, is the same environment where people are going out and buying shoes, or buying video games, or buying whatever it is, or laptops, or whatever it is. It's not like, people are gonna say like, okay, well, I have a lot less money to spend right now. I have a lot less money, inflation's killing me, but I'm still gonna buy that new truck. Especially when interest rates are higher, right? Even just financing a car or financing a house right now with higher interest rates makes it more expensive to do so. So to hear GM give that, I think if you're really bearish right now, or if you're still sold on this idea of a big recession coming in 2023, I'm not saying you have to change your mind because of one thing GM says. I would just start to wonder, or start to question that bear thesis, saying all right, if I think all this huge thing, how is GM? Why are people still buying? It just some of these things are not, they don't go well with the idea of there being a huge recession. GM saying they expect a breakout year does not go well with the idea that there's going to be a huge recession. And again, I'm not trying to take too much out of one thing, but I think across the board, last I saw from FactSet, it was something like 68% of companies that have reported so far have actually beat expectations. I don't know. I mean, I'd like, I think there will be, here will be the big things. Earnings aside, I'm going to be watching, obviously, Jerome Powell press conference tomorrow. I think the actual number itself, I think it's pretty much certain it's going to be 25 basis point hike. The current target rate is 25 to 425 to 450 basis points, so 4.25% to 4.5%. It's according to the CME Watch tool, which again, the way that this tool calculates the probability of the next rate hike is done using, the bond market and all of these things. They find it to be 98%. So 98 times out of 100, essentially, the interest rate is getting hiked, or is getting raised by 25 basis points tomorrow. And, numbers aside, I think it'll be more about Jerome Powell's tone. But I think also what we have to be looking for is the jobs numbers, the non-farm payroll, because we've been hearing all these headlines about tech companies doing layoffs and all these layoffs. However, we talked about this in the show last week. There's, kind of a disproportionate amount of media coverage given to these big tech stocks, given to Microsoft, Amazon, Google, Tesla, compared to other companies. So we might see all these headlines about these tech companies that are laying people off, but then the jobs numbers themselves look good and the unemployment doesn't go up. And that's exactly what we have seen the past few months. And so, just because we've seen more news headlines about layoffs doesn't necessarily mean the unemployment numbers rising or that, there are people getting laid off. That will be my big sign, I think, from the overall market perspective, that when I do see that unemployment ticking up, that, okay, now the Fed's going to be put in a position where it really has no choice but to at least stop raising rates, right? The Fed's not going to look at, and we'll keep monitoring CPI, obviously, but assuming that inflation continues to moderate, assuming that inflation doesn't start moving the wrong way and going back up, that the Fed's not going to look at a rising unemployment number and, continue raising rates, again, while inflation is moderating and falling. As long as that unemployment number continues to move lower or remain the same, the Jerome Powell and the Fed can still say, hey, inflation's still above our 2% rate. We need to keep raising rates. So once that unemployment number does really start ticking up, and again, just because we've seen headlines about tech companies laying off isn't necessarily an indicator for the overall economy. We've seen that happen throughout the past few months where big tech companies are laying people off, yet the overall unemployment number stays pretty steady or actually has been moving lower. I'll be watching for that, and that will be my sign that, okay, now the Fed's in a really tough spot. Because right now, the Fed can say, hey, I mean, the economy is doing well, right? The economy is doing well, and inflation's moving lower, so it's doing the right thing right now. But until that changes, is when that would be my sign that, okay, here the Fed's gonna have to flip. Now I want to get really long. But all right, guys, I see our first guest hopped in backstage, Mr. Rod Alzmann. Without further ado, it's been too long since we've had Rod on the show. I think since last summer, actually, but I'm sure he's been getting a lot of reach outs, media requests right now. 2-year anniversary, basically, of when everything went down. So let's give Rod our special Zinger Nation welcome and catch up when we come back. Sorry about that. Mr. Rod, how are you doing today?
Hey, good morning, Aaron. How are you doing?
I'm good. So have there been people reaching out, basically being like, it's been 2 years since GameStop, we want to chat?
No, it's funny
Really?
to say that. Not for me, at least. I'm sure Roaring Kitty gets his requests that he's been ignoring. I'm sure those are piling up for him, but not for me. That was fun. I was on with you guys a few times 2 Januaries ago, and felt like every time you guys had me on, all these halts kept happening. It was crazy. It was mania.
Hey, shh. We don't want to be, we're just a room where it happened. We obviously, whatever. We did get a clip from Benzinga. Well, it was called Power Hour at the time, turned into Benzinga Live. A clip of that was on the Netflix documentary. Did you get any FaceTime on there?
I participated in one documentary. It was the one that they put out. It's on Hulu right now, Rise of the Players. So that was a bunch of many of the people who were participated in that documentary were part of the Roaring Kitty chats back in early 2020 before it went haywire, summer 2020. So that was my one that I agreed to do. I did have to deal with an expensive investigation. It's costly to deal with complying with subpoenas from our 3-letter agencies. So fortunately for me, that's all in the tail view. Working on things with Wook Capital Management now. So having good times over here, but hopefully no more crazy manias that cause me to deal with the feds.
Yeah, and I wanna, I mean, obviously GameStop, like, is that for you a closed book? Like, is that chapter over? Are you still holding shares? What's the deal?
Yeah, I have no position in the company. I think their prospective transformation has been a little bit disappointing to date. They've dealt with the challenges of this console cycle kind of being in fits and starts where the software launches at the onset of the cycle weren't as impressive as they could have been ex-COVID. There's a lot of exciting games coming out in 2023, but just it gets back to valuation for me. It was a compelling deep value DFV, if you will, in 2019, 2020 when it traded in the, I guess, split adjusted. Now it traded around a buck split adjusted, and I was an aggressive buyer at those levels. But now it's clearly many 10, 20x times the valuation today, and the reality is the income statement still doesn't reflect that transformative improvement. They're still on an operating basis losing money. There's obviously a very passionate investor base, and they tapped them at the market offerings. That's really revamped the balance sheet from where it was in the beginning of 2021 to where it is now. They have no issues from a solvency perspective, but it's just a valuation thing. They would need their EBITDA to get back toward record levels in the early 2010s before digital really took share in the physical from physical games. So that's kind of where I'm at. We still monitor it though. Every time they have a quarterly call, we've been hosting those calls on the Wook Capital Management Twitter, just because we know a lot of our folks who are familiar with us are interested in following what's going on. So I'll share my perspectives on what's going on with the income statement, with gross margins, with all that stuff. I'm well aware of it. I think I might have told you guys when you had me on in before all the craziness that it was the first stock I ever bought when I was in my mid-teens in the early 2000s. So it has a special place in my heart. I'll always be interested in what happens with it, but just because you like a business or you like a stock doesn't make a compelling investment opportunity.
Got it. Jay Rice in the chat's asking if you ever got short GameStop.
I have most of my assets in IRAs after the whole GameStop craze. So you can't short stocks in IRAs. Regarding Wook Capital, we've been opportunistic throughout the past year. So Wook began as a direct byproduct of GameStop. John Kim, the chief investment officer and founder of Wook Capital, and I met during 2020 digitally. We were both very interested in GameStop. So John had been one of the largest individual shareholders in GameStop before exiting in the north of the $300 per share range during the mania. And the capital that he accumulated as a byproduct of that has become Wook Capital Management. So memes like GameStop, when the implied volatility goes haywire and when they get those crazy spikes, whether it's short covering, whether it's a resurgence of retail interest, I think year to date, it's a combination of those two things. Whether it's GME, whether it's BBBY, any meme, if we think that there's an opportunistic risk reward from the fund's perspective, we'll sell naked calls. We have the balance sheet that we can absorb the position moving against us meaningfully. And that's been a major contributor to performance for 2022. We ended the year up as a fund, just breaching into the positive double digits. And year to date, we're actually up about a comparable amount, into the low double digits. So we've had a great run considering what the market's done over that period of time. And yes, it does involve opportunistically deciding to sell lottery tickets to the memers if the risk reward is attractive. But yeah, that answers the question.
It does. And Rod, I appreciate the transparency, and I'm sure Jay does, and the rest of the audience as well. Rod, unfortunately, so I have another interview at noon, and they've got a hard stop at 12:15. I'm not cutting us off now. I'm just saying, I want to get way more into what you guys are doing at Wook Capital and everything. I just worry that, in 5 minutes we might not get to all that. So I just want to do some rapid fire questions here, but we get you on again soon so we can get more in depth into what you guys are doing at Wook. So a few things I'm curious about, and again, try to go quickly here. So when you and I'll include you and Rory and Kitty kind of in the same breath, like first found GameStop, whatever, before everything. I mean, it was kind of, you guys were both kind of looking at that intrinsic, like deep value in it, kind of in the same perspective. Is that correct?
I think we were thinking about it fairly similarly. Yeah. Like for both of us, it seems, I had a couple one-on-one talks with him. I haven't spoken with him since everything happened, 2 years ago. But at the time, my sense was that his view was that the core foundational elements, the operating business, could generate much more cash than it was. It was the tail of the last cycle. I think we all thought the business would improve from the next cycle coming upon us. There was the element and the awareness and the cognizance of there being a supremely large short interest, partially as a byproduct of George Sherman, the prior CEO's buybacks that he began to act upon in early 2019 when he was hired. Actually, on my birthday, 2019, he did 2 rounds of buybacks, which slashed shares outstanding meaningfully, and that's why you got to a short interest that became eventually like 140% of the float back then. And that was a secondary consideration, but it was something that it was a curiosity, and clearly it played out beyond our expectations. But at its core, I think, like Keith, there's a fundamental reason this business should and can exist and be profitable. And that question still is outstanding. There's still folks who think it shouldn't exist, and there's still folks who, like me, who think it should, just that the valuation is not attractive.
Got it. Yeah, and that's what I think what that leads me to, wonder today now is like, and I'm sure when we get more into what you guys are doing at What Capital, we can talk about it, but like, are there any, deep values names like that right now? Like, I've been looking at some of these department stores, Macy's, for example, the market cap's like $6 billion. And if you just look at how much, it says right here, enterprise value, $12 billion. So like if the company's, if the market cap's like half of what the enterprise value is, and then you look at its total assets, the company's total debt, there seems to be some sort of misalignment there, as if like the market's pricing in Macy's to like go out of business or something. And it's like, all right, do I think that's going to happen? Is that the right way to look at it? What do you think?
Retail is really interesting right now. And I think you're right that there could be some diamonds in the rough that aren't going to walk away on the other side of where we are, out of the soft landing, the recession, whatever it is that we come into in the back half of this year or throughout this year. Retail, the thing you need to really be cognizant of with retail, though, is how much most of them over-earned during COVID. If you look at, for example, like gross margins for a lot of these retailers, if you want to see a crazy chart, look at Dillard's, look at DDS. Dillard's is just been an absolute beast. Absolutely.
Yeah, I had no clue. Why is Dillard's doing so well?
But all Dillard's is, right? All Dillard's is it's a department store. It's a Macy's-esque, maybe it's a little more upscale, I guess. It's the Sun Belt. It has a better geographic base than.
But look at Nordstrom compared to Dillard's. Yeah. Like, how is Dillard's doing so well compared to these other ones?
Dillard's has an excellent capital management approach. They were doing share buybacks, and now they're really returning capital to shareholders through dividends because their earnings per share, I saw the trailing earnings per share is higher than what the share price was pre-COVID. But like with a lot of these companies, gross margins got a huge tailwind from COVID, whether it's consumers had, stimulus dollars to spend. Like Ulta Beauty is another one that's at all-time highs that I think is a short. I think Ulta is an interesting short.
All right, well, I got to get you back on and talk about it. I got to get you back on and talk about the Ulta short, because I actually I've loved Ulta for a while. Elf Beauty is another one in the cosmetic space that's been doing really well. But Rod, I got one last question for you, because my 13-year-old Aaron would kick myself for not talking about this company, because I get to in a work setting and make it professional. But I remember a while ago you were pretty bullish on Playboy. Stock hasn't been doing well. Have you changed your mind at all on Playboy?
I have. I wear a lot of egg on my face on that one. And I know you got to kick me off in like 60 seconds here, but the error with Playboy was a lack of a track record from an operator perspective. Management was private equity, is still private equity guys who are running this business. And in my opinion, they've failed at a lot of turns. And the governance structure is also one where the largest shareholder basically has it locked down. You need to get past a 2/3 supermajority to effectuate any board change. And we had a meaningful position. We've yet to disclose selling the position. It's been a learning experience for us, but thankfully for the firm, even with that huge headwind, we were able to have a successful 22, and we just got to take it as a learning. But given the management and governance issues, while I still think the asset base is deeply misappreciated and undervalued, it comes down to I don't know that management can unlock that value, or management will return capital to shareholders. So I've begun to capitulate in my personal account, if you will, but that could have been a less painful lesson if I'd kind of gone into it with thinking more about governance, thinking more about risk than thinking about upside. And I think a lot of us, maybe who were high off of our winnings of 2020, 2021, didn't really think about those things. So I know you're booting me off, but tonight, if folks want to join in, we are hosting on Twitter Spaces Margin of Safety. It's a book by Seth Klarman. It's a value investor oriented book. We're going to have a book club discussion on our Twitter Spaces, our @Wook Capital handle. So that'll be at 8 o'clock Eastern tonight if folks want to tune in and listen in.
Awesome. I'll drop your Twitter in the chat. And yeah, Rod, I appreciate your ability to be candid talking about that. And I mean, it doesn't matter if you're, Warren Buffett or Carl Icahn, you're going to have a few losses in there. So always good to take some learning experiences from those.
Absolutely. It's a multi-year investing is a long journey. So you're going to win some, you're going to lose some. You just got to make sure when you lose, it doesn't blow you up. And if you win, it doesn't unmoor you.
Well, like I said, I appreciate you being open and honest about, like what goes into that. And I think if anything, it increases your credibility to me, and I'm sure it does for the audience as well. So
I'd love to be back and talk more about Wook, Aaron. I know you got to kick me off, but it's nice catching up. Hope to talk again soon.
Yeah, we'll do it. We'll do it soon. I promise. So I'll reach out right after the show. So enjoy the rest of your Tuesday. We'll chat soon. Guys, tune into the Twitter space. If you want to give Rod a follow, there's his Twitter in the chat. Thanks again, Rod.
Thanks, Aaron.
Alrighty, guys. Rod Alzmann from GMEDD.com. Alrighty, we'll keep it ticking. I see our next guest hanging out backstage. We've got Tom Grant, the VP of Research at Apptopia, like I mentioned earlier. We're going to be talking about Snapchat. The company's getting ready to report earnings after the close today. So without further ado, let's go ahead and give Tom our very special Zinger Nation welcome. And when we come back, we'll be talking some Snapchat. Hey, Tom, how's it going?
Good, Aaron. How are you doing?
Good. Welcome to Benzinga Live.
Thank you very much. Thanks for having me on.
Of course. So before we get started, do you want to give just a quick introduction to who you are and also what Apptopia is and what it is that you guys do?
For sure. So Apptopia provides mobile data estimates on all apps on the App Store and on Google Play worldwide. So when I say mobile data estimates, I mean how many times an app got downloaded that day, how many times people used it that day, how many times it got opened, how much time was spent, et cetera. We have all that on over 7 million apps worldwide, again, on a daily basis. So as of today, you can see yesterday's app activity and app performance. And so I spent 15 years on the buy side, investing in stocks globally. When I saw Apptopia's data, it was immediately obvious to me how to use Apptopia's data to get ahead of consensus.
Yeah, and so I'm curious before we get into that data and kind of some things, obviously I mentioned Snapchat, but like how just in general do, funds, investors use alternative data, and then like more specifically, why this mobile app data is kind of differentiated from other sets of alternative data out there?
Yeah, that's a great question. So like when I started my investing career, having like better financial data was a huge edge, right? But then everybody had good financial data and there was more regulation around it. So then having good management access was a huge edge. But then that got regulated too. And so investors are always trying to find what's that next thing that they can use that other people don't have. And so getting up-to-date, real-time information on how a business is performing that's really what you need. And so credit card companies were big into this early, investors getting data on credit card transactions. Mobile data is in that same vein where you can see what's going on with the company every single day. You don't have to wait quarterly. You don't have to wait until the management decides to talk to you. You can see it as of yesterday. And as companies become more mobile and more digital, there's just more and more value in mobile data.
Yeah, and that's why, I mean, people always talk about like, oh, if the app's free, you know, it's you're the one that, you know, they're taking the data from you and then selling that and stuff. So, what's the weirdest kind of like set of alternative data? I always love the satellite images of parking lots. That's
Yeah.
my favorite.
That's the one that gets me, Aaron, because I try to. So what investors do with it is they take all this data, they try and associate it with a ticker, and they create like a timeline of like activity, right? So if you're using satellite data, somehow you're processing the images on like a day over day or minute over minute to see how many cars are in the parking lot and if there's trailers coming in. That one to me seems like a lot of work for maybe not a ton of return. I don't know. That's what I like about mobile is because first of all, there's huge companies that are very mobile right away. Like the Facebooks of the world, Snapchat, which we can talk about in a minute, like that mobile data is just right on for what they do. And then every other company that's consumer facing to some extent, they're introducing apps and more activity. They want people on their apps more. So the mobile data is like direct and like it's customer activity. That's what it is. That's what people want to see.
Yeah, and something I'm curious about before we get into this Snapchat data, Tom, is take a company like Snapchat, for example, that's pretty much 100% an app. That's like what it is. That's what the company is. Compared to say like a Walmart, that's a huge company that also has an app. Do you take like more weight from the mobile app data from a company like Snapchat that's pretty much predominantly an app versus a company like Walmart that just kind of has an app as like a secondary feature of its company?
So for sure. However, our data is also useful on Walmart.
Okay.
So like Walmart, our data is perfect, right, Aaron? For like a Walmart or a Target where they actually report their digital sales, we find that our data correlates really highly. Like you can use our data to track what they're going to report for digital sales or for e-commerce sales. And so like when that becomes valuable, Aaron, is when the management team of the company, say a Walmart or a Home Depot, whoever, actually Lululemon's a good example, Nike's another one, when they start talking about digital transformation, you can use our data to be like, all right, is it actually happening or not? Like you can see every day, like, all right, you're talking about it, but we're not seeing any change in mobile activity. You're not getting new downloads. You're not increasing the engagement. So that's when it becomes super useful for those more like brick and mortar type companies.
Yeah, and I think I actually do know that Walmart specifically like puts a lot of money into its technology and app and is like trying to compete with Amazon and grocery delivery and all this. So Walmart actually is surprisingly, I would say, like probably more so than some people think, like invested in tech and whatnot.
Yeah,
but Tom, sorry, go ahead.
Just to jump on real quick, your previous guest mentioned Ulta. So I'm like fascinated to hear what he had to say because their mobile strategy has been awesome this past year. Like they saw 34% year-over-year growth in the fourth quarter in terms of new users for their app. They were behind some of their peers previously to that, but they did a great job in the fourth quarter, and they're starting to show up in the kind of activity that we're monitoring on a weekly basis. Like who had a strong week this week, who had a strong week this week. Ulta is still showing up there. So like at least from a mobile user perspective, Ulta's looking strong. But that guy sounds like he had some more information. So I'd love to hear what he had to say on Ulta.
I know, like I said, I like screwed up. I was like, oh, you know, I would love. We're gonna get him back on the next. So I'll send you when he comes back on what he has, because I'm curious too why he's short Ulta. Because you said their digital strategy has been great. It seems to me like every one of their strategies has been great. If you just look at the stocks chart, you know, the stock over time. I mean, they also have a partnership with Target, which I know has been huge for the company. Right, so Ulta's a monster. But Tom, let's transition to Snapchat real quick. So the company is getting ready to report earnings today after the close. I'll show just the stock chart here, obviously, real quick. It's been clobbered down from like 83 bucks last October down to about 11 bucks now, and then it's moved a bunch on its earnings reports, both to the downside and the upside. I remember, you know, obviously there's ones where it went down 30%. There was one where it went up like 50% after. That's right. So there's always big moves for Snapchat.
Yeah. If you look at 5 of the past 6 earnings periods, the stock moved more than 20%, either up or down after earnings. So like, God bless the analyst that has their neck stuck out on that one. Right. But what I can tell you, Aaron, is our data tracks very, very well with what the company reports. So like, again, when I'm talking about that correlation, we have extremely high correlation with what we see on Snapchat DAUs and what they actually report. And so in this case, we are seeing a small divergence in our data from what consensus is expecting. So both consensus and Apptopia data, you got the chart up there? Nice.
Yeah.
we're both showing is a sequential deceleration in growth, but consensus is at 3% quarter-over-quarter growth in DAUs, where our data is showing more like 1%. And like our data lets you drill down a little bit more. And what we're seeing is that the North America region was actually negative in the fourth quarter, whereas consensus is expecting positive. That's the highest value users that Snapchat has. And so to see your highest value user in North America decline is actually kind of a negative. And where we saw the most growth coming from was India. That's not all the growth, but that's most of the growth. Those are very low revenue customers. You know, they can't charge a high price for US advertisers to advertise in India, right? So when you look at this data and what we're coming in, it's a little bit below what consensus says. Then when you look at the mix of users, it's probably a little bit more negative than what consensus is expecting.
Got it. So yeah, you guys, so basically this green bar is showing the global average. Is this the consensus? What people are expecting it to be?
The solid green line is actually what Snapchat reports. Like that's their reported data. The dotted green line is showing that from last quarter to what consensus is expecting this quarter.
Got it.
The pink line is Apptopia data. So you can see there's been that separation where our data is showing a little bit less of a growth in the DAUs than what consensus is expecting.
Well, so, even what they've been showing, right? I mean, isn't...
That's right. That's right. So you can factor that in a little bit, that Apptopia's metrics have been slightly lower than Snapchat in the past, but still like we're continuing to show that separation start to grow and grow and grow.
Have you seen that happen with companies in the past before?
Yeah, so that definitely happens. Like, and this is one moment to take a quick step back. Our methodology is totally algorithmic. We don't have any user data that factors into these estimates. So there are times where our data will be on, and there are times where our data will be off. Given our track record with Snapchat, because it's been so tight, I feel pretty confident that we're showing the right signal here.
Got it. So I mean, I'm just speaking right now freely. I would, if I were a super long Snapchat investor, I would be concerned if like that trend continued, that over time they were reporting a certain number and then data was showing a different number. No?
Totally, Aaron. So as you know, companies can redefine how they report their metrics all the time. Like last year, we saw Twitter restate their user data going back a number of years. There's fact in what Snap reports, but as we all know, these things can be adjusted as the company desires.
Well, there's also the kind of subjective aspect too of how you want to contextualize the information. I mean, you mentioned the India versus, acquisitions versus US. And I mean, I'm thinking about if I were the, person at Snapchat delivering that, I would say, well, India is a lot bigger. There's a way bigger growth opportunity. There's way more people here. It's a great thing that we added more people in India. And so I have a feeling that you'll probably hear them talk about, say something in line with that tonight and see if that helps, investors or try to make them want to buy the stock more.
And as a global investor, as I mentioned, I can't tell you how many times I heard, well, we've got a short-term pain here, but the long-term gain is where this is coming from. And you should really be positive on our long-term outlook in emerging markets. And it's just a way to cover up what's going on under the hood. But one thing I really do want to get to, Aaron, is that DAUs is only part of the story for Snapchat. Ad revenues is a huge, huge part of the story as well, and what caused a lot of the most recent quarters move. So what we're also able to see at Apptopia is some individual device information. And what we noticed is that Snapchat's most valuable users, so those are the ones who spend the most time on Snapchat, they actually started to increase their time spent each month starting in December on a year-over-year basis. So earlier in the year, these most valuable users were spending less and less time on Snapchat. In the fourth quarter, it looks like those most valuable users have started to spend more and more time on Snapchat. And the reason that matters is the more time you spend on Snapchat, the better Snapchat can target an ad towards you. So then they go to their advertiser clients and say, hey, look, I know a lot about Aaron Bry. He spends a ton of time on my platform. I'm going to give you a really high ROI on your advertising if you put it on my platform. And so that's the one thing, Aaron, that would keep me from being like really negative going into Snapchat's report, is that their most valuable users are spending more and more time on Snapchat. So it looks like their ad inventory could actually be pretty valuable. And it just comes down to what is the ad demand. And that, I don't have any data on that one for you.
Right. That's interesting because I know, obviously there's a lot of big companies, whether it's Meta, Facebook, and Google talking about just the slowing ad demand out there.
Right.
But I would be curious on that, you know, the time spent for the certain users on Snapchat. Is that
Right.
that could, you know, I wonder if that might just be a byproduct of the fact that they were just using it less and less and less until it got to a point where it's like, all right, now, you know, from some sort of, you know, quarter over quarter basis, it's up, but it's really still lower than it was, you know, say 18 months, you know, whatever. Are they really using it more? Is it whatever? But either way, Tom, I mean, it's been a great discussion and insights into Snapchat before the earnings today. We got to do this more often. I mean, what off the top of your head? I mean, I know you said that Snapchat's great for you guys. What are other ones that are good for Apptopia?
Yeah, I'll leave you with a nugget on Meta. So Facebook's downloads in 2022, so new users, was down 28% year over year. And people talk about like, oh, is Facebook being used as much as it was before? We have the data. They are really struggling to grow.
Are they making up for any of that on Instagram downloads or anything?
Instagram was up 1%. So
up 1%. So down 26 year over year for Facebook, up 1% on Insta.
That's right. And they're spending billions in Oculus. So good luck with that.
All right. Well, Mr. Grant, enjoy the rest of your Tuesday. Like I said, this has been great. Everyone smash the like for Tom. We'll chat soon. All right.
Thanks, Aaron. Take care.
No problem. All righty, y'all. That was fun. We got to do more of that. Thank you, Mr. Grant, for coming on from Apptopia. All righty, guys. I see my man from Impeccable Investor hanging out backstage, Austin Bouley. We got to give him our special Zinger Nation welcome. When we come back, we'll be chatting to Austin about what he's been watching, what he's been trading. Do not go anywhere. Mr. Austin, how you doing today?
Good morning, Aaron. So glad to be here.
Good. Your email signature was from Impeccable Investor. Is that all right? I'm seeing a different name on here now.
Yeah. So it's the Impeccable Investor, Impeccable Stock Trends. The whole thing is kind of together. So, yeah.
Beautiful. So this is your first time on the show, at least with me. Let's before we get going, why don't you just give us a brief introduction into who you are, what you do, how long you've been in the markets and in the game for, if you will.
Yeah, so I mean, you said this already, but my name's Austin. I've been in the game since 2016, which for me was 16 years old, so very young. I was one of those weird kids who you would drive past the gas station. You were born in
2000?
Oh yeah, I know, right?
Holy cow, I'm old. All right, go ahead. You were driving past the gas station.
I was driving past the gas station, and I noticed how the price would change. So as a kid, I thought it'd be a fun game to be like, okay, am I buying today? Okay, so the gas price is going up tomorrow. Did I make money? Did I lose money? And so I was always that weird kid messing with numbers. Anyways, but that led to me just finding
that is weird. That is
exploring
weird.
stuff. And now we're here. I do a lot of swing trading, stock trends. I built a social media following. And now my main gig is the software platform, which is a research platform for swing traders who want to learn the trends of stocks and know what's going on and why.
That's awesome. Yeah, I mean, that's taking it to a next level because I think a lot of kids, kind of start looking at numbers and seeing things differently, and they're, intrigued by math and stuff. But thinking about if you would be buying and selling gas really takes that to the next level. I mean, I'm sure, you've got some interesting stories, but Austin, so let's take a look at or I guess let's, talk about what's going on right now. I mean, it's an interesting time with the Fed, inflation, everything going on. I mean, what's been top of mind for you?
Yeah, so what's been top of mind for me is the statistics around, I'm a very math person if you haven't guessed yet, but is the pre-election year statistics. So in the market, the S&P 500, if you're looking at the ETF SPY, is what we're seeing is that on average, when we have a year before a presidential election year, we average about a 16.3% return that year. So we have all this crazy stuff going on with the Fed, with interest rates, with all this stuff, and it can kind of be a dampener on things. But what we see is, statistically speaking, this is going to be one of the strongest years that we've seen in a very long time. And that's actually a really strong statement compared to the year that we had in 2020, when we had that initial crash with the reaction to the global pandemic. And then we actually saw a really strong rise in stocks. And that's kind of what is forecasting here for this year, for the pre-election year. And so that's really what my data is based on. And so the stocks that I'm looking at for that, it's definitely the S&P 500, QQQ for the NASDAQ, and then also some individual stocks. I'm looking at Apple, Exxon, and Workday are kind of some that I'm looking at mainly for those bottom type of recoveries. So yes, that's kind of what I'm looking at.
Got it. So walk me through exactly what the software product is. I mean, what do people get, from the, is it an actual software, or is it more just like kind of your trade ideas?
Yeah, so it's an actual software. So the software will go in, it pulls, like when you look up a stock, it will go through 5 years of historical data for that stock. I'll look at, okay, how well has this stock trended in the past? And it looks through that trend, and it gives you, based on math, based on the algorithm around it, how well does this trend? What is the momentum and strength right now? Does it have the potential to make me money? And if so, what is my trade plan? Where should I be buying in? Where should my stop loss be? Again, based on how volatile this stock is, and so many other things like that. So it's really a great research platform for people who are more of a trend follower or a swing trader.
Got it. I mean, so I guess like in terms of people that are out there, is it mostly like retail investors that are buying the software services? Is it, funds? Who are the main customers?
We have a few funds, but it's mainly retail investors. Yes.
Okay. And then do you personally, I mean, are you basically trading or investing based off like these algorithms or whatever? Or are you like also then you're personally like looking at the data and then giving your own like personal insights and what you think?
Yeah, so I'm personally trading off the algorithm in the software, but then I also have my own takes on stuff. So like throughout the software, if there's a stock that I have interest in, then I'll make like a little video or like comments in addition to all the research you get with that. So that's like my own little personal addition to those comments and whatnot to those stocks.
Got it. So you mentioned Workday. What was the what was the trade you were looking at in that stock?
Yeah, so Workday, I really love Workday because of it has great potential to the upside and relatively low risk right now. It's at that low, and it's really approaching a great resistance level. From a technical chart perspective, it almost looks like a triangle breakout pattern, kind of forming to the upside with a lot of upside after we break that resistance level. I forget exactly where that resistance level is. I can't see on the chart, but it's exactly where you put that line or where that line current, like where.
Yeah, I think it's right around 185.
Around 180. Yeah. And so again, you have a lot of upside for very low down risk. So again, that's kind of why I like Workday. And so again, that's what we've been seeing a lot here in the earnings season, is that the stocks have been going down forming these lows and then starting to bottom out and actually starting to recover. And these earnings, although not as great as we want them to be, have actually sparked some upside after we're kind of dipping. And so that's what Workday is showing, as well as some other stocks. Like you have like PNR. I know AMD is coming out later today, and ExxonMobil, but that's been trending up regardless. But PNR is another example of like Workday, I guess, where you kind of have that coming out, and then it kind of on earnings is actually spiking up. So yeah, that's, you're seeing the same thing, almost like an inverse head and shoulders type pattern, but you're kind of forming that bottom, and now the trend is starting to push up, and we're seeing that momentum and strength kind of building around that. So yeah, we're seeing this trend with earnings. We're kind of seeing that dip, that turn, and we're kind of building up. But again, like I said, this is the pre-election year, and statistics show that we're starting to build into the strongest months coming here soon.
Got it. Yeah, and I like kind of a few things you're doing there, Austin, and weighing just the relative, risks and returns, which sounds obvious as like an investor or trader why you would want to do that. But saying, looking at Workday as an example, saying like, hey, there's relatively low risk to the downside, right? Like this thing bottomed out at around 140. It's at like 180 now. Like worst comes to worst, it's probably just going down to those lows and not much lower. Whereas the upside, looks a lot higher, a lot more to go than to the downside. So, and I think a lot of people that for whatever reason kind of are like steadfast in their bearish positions right now, or still think like some huge, massive recession is coming, like at least for stocks themselves, like a lot of these have been beaten down so badly already. Like I feel like, I don't know. Like, I feel like some people forgot when they're like, it's like, we've already seen, a lot of these tech companies come down 70, 80%. If you're looking at like crypto or whatever, it's like, we act like Bitcoin didn't go down from 65 to, 16 or whatever, 15.
Yeah, that's crazy. Yeah. I mean, that's really the whole idea around like trend following, is that the trend will tell us what's happening in the market right now. So we can have all our ideas or assumptions, be fearful, whatever we want to be or whatever we want to think about the market, but whatever the trend is right now is what we should be basing our position in our trades off of. And so that's really how the software kind of simplifies things. It kind of just gives you the research. Okay, you can be fearful, you can be this. Because I know back during the global pandemic, personally, I was like, with all the stimulus checks and stuff, like I think the market should be crashing more, but I was still trading and making money to the upside because that's where the trend was. So as long as you're following the trend on whatever the trend is now, then you should be fine. But yeah, there's definitely a lot of fear in the market with everything going on right now.
Got it. So, I mean, do you, what's your like general, are you trading mostly? Are you like, do you trade and then also have an investment account? How do you kind of manage that?
Yeah, definitely. So I started swing trading myself, and then that's kind of how it kind of brought about research and stuff. And then I built the software mainly for myself, and then other people started joining as well, and then it became a bigger thing. But yeah, so I'm a swing trader, so I'm looking for stocks that have potential to grow within a week to a few months. So that's kind of my whole period, just looking for strength within that kind of time period.
Got it. And what, so you don't necessarily like have a long-term investment account as well, or do you also
Yeah, I
just,
do.
buy and hold stuff?
Yeah, so I do about 50% is long-term, 50% is swing trading, and most of my long-term investments is just in SPY.
Okay. Yeah, that's so. I mean, like, let's take a look. I've got the SPY chart pulled up right here.
Mhm.
I mean, I've got the 5-minute chart because I was curious if we're close to the high of the day, so I was looking to see if we were gonna potentially try to break out here. But I'll pull up the daily chart. I mean, how you feeling? Like, you think we've got like things have been pretty good so far in 2023. Knock on wood. It's been a new year so far. Yeah. How you feeling? Are you feeling good? Are you feeling like that's gonna continue, or are you worried?
I'm actually really hopeful for this next month. So if we're looking at it, the market was trending up, then we kind of hit that market top, and then we've been trending down for most of the end of 2022. But now we kind of broken that down trend line around the level where it is at now. We're kind of hitting those resistance points. But what I'm really hoping on and betting on is that February, on average, or over the last 84 pre-election years, has averaged a 2.8% return in the month of February for the S&P 500. So considering we're setting up near this resistance level, we're actually looking kind of strong. Volume is at least there enough to support the move. And we have our average for February to be almost a 3% return. I think we're setting up for a good February at least, but that's just what I'm looking at based on statistics and trend. I'm hoping that we kind of get that push into February to kind of set us up for the rest of the year. But January has been great and we can't complain. So yeah, it's been good so far this year.
Yeah, I really do think February will be kind of pivotal for the market because like we've said, I mean, January has been great. SPY's up, again, knock on wood, up another 0.7% today, but it's up like more than 5% on the month now. And the way I see it is if February like continues strong, I think that's going to get a lot more people bought into the market that maybe have been watching it this past month thinking like, okay, this, like I'm going to wait till after earnings, or I'm going to wait till, Powell says this, or I'm going to wait till this. And then eventually like all these people that are sitting here saying, I'm going to wait for this, I'm going to wait for that, are going to see the market keep moving up, or if the market keeps moving up, and then want to hop in and start buying.
Yeah, we need something that is going to re-inspire investors to jump back in the market. And definitely, if February is a strong green month, then we'll definitely have that push in, which again is just going to exemplify the movement. And we're going to see a stronger push up for the rest of the year, which again, I'm hoping for, but also expecting based on statistics, a strong first half of the year. And then as we get into summer, I expect a very slow down, maybe even a slight pullback or reversal. But I'm really hoping and looking for a strong February, March, in April.
Yeah, so we're gonna have to wait and see because again, looking at the SPY daily chart, if we get this confirmation here, or if we break this 410 level and start. Here's the thing: is I've still been hearing people, well, we're still making lower highs, we still haven't made any new So if we start taking out those lower highs and start making higher lows or higher high, whatever you want to say it. If it keeps going up, like that's basically the bottom line, then I think it's starting to our 70-inch. Sorry, I just got so distracted by a comment. It's crazy. Our 70-inch flat screen HD TV is considered furniture. That's a good question, Jay. I don't know. I would think a TV is considered more of a No, I think like furniture, the furniture has to be like a dresser or a couch or a bed. Like a TV is more of an appliance almost. Not even an appliance, an electronic. You'll give it appliances, electronic. I don't know. What do you think, Austin?
I don't know. I would say let's just call it a furniture because technically it goes on like a furniture, so you can consider it just one whole thing.
Yeah.
But
Well, actually, can we zoom the camera down? Because to your point, we do have a TV like mounted on this desk.
Yeah. See, so it's
So
like
this-
one thing.
Yeah, it's basically a wait here, let me see. All right, here we go. If I go wide, yeah, at the bottom you can kind of see the TV there. So that yeah, I mean once the TV is sitting on the desk, then it becomes like one piece of furniture, one
But before
object.
that, it's just an electronic, I guess.
I like that. All right, but we could probably go all day arguing about that. So Austin, what about other stocks? We talked about Workday. You mentioned Pentair as well as Exxon. Any other stocks you're watching right now?
Not really. I guess Apple, and maybe actually one I came across this morning that interests me, but I don't know much about it, would be SRRK. I think it had some great potential as a recovery. But again, it is down big, and so I don't really want to bet against that trend, trending down. But again, it does have some potential as it's reversing and heading more back up to the upside. Yeah, what are we saying there?
So I was just looking at the chart real quick, and then I went to the overview. This is in Benzinga pro.benzinga.com.
Yeah.
I was just reading the overview to see what it was because I'm not familiar with the company. Scholar Rock Holding Corp is a biopharm company. It is engaged in the discovery of development of innovative medicines for the treatment of serious diseases, including neuromuscular disorders. So yeah, it sounds like kind of like a pre-rev biotech company, maybe.
And probably something I might avoid then. Yeah, I just saw it come up and I was curious.
No, I mean, from a chart perspective, though, it doesn't look.
It's not too bad.
No, it looks nice, actually. It's coming up like it's consolidated well and is now coming up, making higher lows. And if you break here, I would say from like $15, and there's certainly room to run. So I'll have to keep that one on my radar as well, SRRK. What about kind of like, instead of talking about stocks right now, what about in the past? Like, what have been your favorite stocks to trade? Have you had any like, specific, like, oh, that time I bought those calls on Amazon before earnings was like my favorite trade ever? Do you have any of those?
I mean, a generic trade would be Apple. I had a long trade of that for a while, and I was doing covered calls on that, so that was a great trade. But I can't think of any outside of that. I am a very slow trader where like I take very slow, small gains. Like I'm not going for like the penny stock moves. I don't have any like I made 100% overnight type deal. But yeah, definitely Apple. I love trading Apple with covered calls, especially in this earnings environment. It lifts up the implied volatility, or not even implied, but the actual, and it increases the options premium. So it just makes covered calls a lot more advantageous. So yeah, that's been fun in this market.
Yeah, nice. I always love asking people that, kind of like their favorite trades of all time. Well, Austin, this has been a great conversation. I'm glad that we found a time to get you on Benzinga Live. Where can folks find more from you?
Yeah, so I'm on almost every social media platform at the Impeccable Investor. You can find me there, YouTube, podcasts, Instagram. Would love to connect with people.
Awesome. Well, everyone, I'll drop your Twitter in the chat. Everyone go give Austin a follow. Austin, enjoy the rest of your Tuesday. We got to get you on Benzinga Live again sometime soon. Hope you enjoyed it.
See you, Aaron.
Alrighty, y'all. That was Austin from Impeccable Investor. Like I said, going to drop his Twitter in the chat. But alrighty, y'all. We've got about 10 minutes till our next guest, Clinton from Crypto Tax Audit. Before we get to that, y'all have any stocks, any trades that you guys would like to chat? We can talk about AI stocks for a second. So the ticker AI is up 26% today. If we look at it from a daily chart, you can see that the stock has basically, this is a beautiful pattern, and it's coincided with this news. Stock was consolidating, kind of looks like it had found a bottom right around $10. Boom, dipped below. Down in January, the stock just took off. This is kind of with ChatGPT. After ChatGPT has now put artificial intelligence back in the hold on, caveat real quick. Yes, Jason. Not investment advice, but yes. ChatGPT has put AI back in the public eye, in the limelight. I mean, if you're in the tech scene, if you're in, investing in tech, whatever, AI has been talked about for 10, 20 years. People have talked about AI taking over forever. Now ChatGPT has reemerged that conversation. People are now talking about, again, all these AI names are running. And you might see what we've seen happen a few times in the past, where companies just try to hop on board with the newest hot thing. I mean, we saw last week BuzzFeed announced that it would be using ChatGPT. Well, I don't know if it said ChatGPT specifically, so don't quote me on that. But BuzzFeed said that it'd be using AI now to start generating a lot of its content. Not, it said it would still rely on humans for its, real journalism and its, when it's trying to break stories and whatnot. But for like little BuzzFeed polls and fun things like that, content pieces, it's going to start relying on AI. And the stock took off. I mean, there are other aspects to that as well. I'm not going to say that's the only reason BuzzFeed went up that much, but what a lot of people were reporting is, okay, like now, once that memo went out from the CEO, that it was going to start using AI, the stock went up even higher, and then it went up even higher again after that. So I think a lot of companies are going to start doing that. We've seen this happen in the past, like I've mentioned. Kodak. The old Kodak, Eastman Kodak camera company, going way back in the stock chart. This move right here, 2018. This is when Bitcoin was at, however much, back in, Kodak announced it was going to make its own cryptocurrency. The stock tripled because Kodak said it was going to make its own cryptocurrency. So remember that sometimes when the markets are being silly, or if you think the markets are being silly, sometimes they just are. Because I'm sure a lot of people at the time would have told you it was ridiculous that Kodak stock tripled just after the company announced that it was going to make its own crypto coin. And now in hindsight, that person would have been right. Even though, another person at that time might have told you, no, the market's efficient. It's reassessing its current value of its net free cash flow at its current price, whatever it is. You've seen that happen with cannabis companies too. I mean, Scott's Miracle-Gro, which a company, I used to love this stock, man. I mean, shows how dumb and wrong I can be. But, Scott's Miracle-Gro is one of the companies that tried to associate itself with the cannabis industry, and then after a while now is like, you know what, never mind, that ain't working out. Sorry, guys, 1 second. All right, in about 7 minutes, we'll be talking to Clinton from Crypto Tax Audit. We'll be talking a little bit. I mean, it is we are getting into tax season. So if you've traded crypto at all or invested in crypto, and you're wondering what to do about your taxes or whatnot, Clinton's not going to do them for you. Or no, we're not going to. But we'll talk about it. We'll talk about some advice, maybe some things we could do. Which again, I'm curious about that for obvious reasons. I think most people that here's the good news. For most people that have, I wouldn't even say good news. I would say silver lining. For most people that have bought into or invested or traded crypto, probably all had the same experience in 2022. You lost some money. And so the tax advice should be pretty similar for most people. Similar lining. Trying to make fun. I don't even know. Trying to make light of obviously like a not fun situation. I know there'll probably be people being like, "Oh my God, Aaron, I lost my life savings," and you're gonna make jokes about it. And I'm gonna say, well, I mean, that's what I don't know. I mean, I probably shouldn't. I apologize. But anywho, owe me $1 for what? Why do you owe me $1? I swear or something? Did we make a bet? Speaking of bet, how are the betting stocks doing? DraftKings. I mean, I don't know. I haven't done my deep due diligence dive I haven't done my my DraftKings deep due diligence dive yet. I will do my soon and see what I think about DraftKings long term, because I think it's an interesting opportunity. And I think in terms of how beaten down the stock is, it is interesting, just because, I mean, not even counting when it got crazy up to $75, but this is like a $15 stock. It's been through a lot from down here. I mean, last May, so almost a whole year's worth, trading in this range from about like $12 to $15 to $16. Whenever I see that, it starts it gets me thinking like, all right, if this could be the floor, I start thinking about limited downside. I start thinking about limited risk, because I can say, all right, I'm going to buy a lot of this stock and set a stop loss at $12 and have a completely binary out and just say, okay, it's either going to hit this or it's not. It's either going to get down to these previous lows that it's been trading at for the past year or so, or it's not. And if it doesn't, then my risk remains limited. If it does hit it, obviously I'm out. Then my risk is zero because I'm out of the stock. So anytime I see a chart like this, and this is coming from someone who's not very technical, but it doesn't have to be like, that's what I think is really interesting about looking at technicals and fundamentals together, is because I think whether you're looking at the chart or whether I was looking at fundamentals and like news stories, it would look the same to me, where I would say like, okay, well, we're basically at rock bottom for the past like year or so, like the companies have reported slower growth, issues with retaining customers, issues with acquiring customers, having to offer like these huge promotions because the market's so saturated. Fundamentals or chart-wise, price-wise, the company's, to my opinion, basically been at rock bottom. Of course, it can always get worse. I'm not saying buying DraftKings here is like a low-risk play. Nothing's low risk in the stock market. All stocks are inherently risk assets, speculative assets. But my point being just that the stock has been so beaten down and trading at this level for a while that it's gotten me interested. I don't know. Here's my hunch. My hunch is that at the very least, in the next, say, 3 to 5 years or so, so I'll call that like medium to long term. I'm not talking about like 10 years down the road, but I'm not talking about like in the next few months either. I think we will see a conversation develop about, if not questioning, was it a good idea to legalize sports gambling? And by the way, this is, I want to like throw this caveat out there. This is someone who is a huge, whatever. I'm a proponent of that for different reasons. But what I will say is, I think we will see a conversation, maybe specifically about the marketing and advertising of the gaming industry, saying like, okay, is it good, or is it, okay that when you watch a sports game and you might be watching a football game with your, 15 and 13-year-old sons, that it seems like every other commercial is like a betting commercial about how you can make $500 using this code and first bet now and first bet this, first score wins $500. I think the gambling itself, I think from a legal perspective, to my opinion on it is kind of like, people are going to do it anyway, right? People are going to find a way to throw $100 on the football game. If you're a state, you might as well regulate it and make some money off of it for a few different reasons. The most important to me being is that if people are betting off like an online bookie or whatever, you bet with credit. You can say, okay, I'm going to throw $500 on the Chiefs to win the Super Bowl. Bookie doesn't know if I have that $500 or not. If the bet loses and I've only got $12 in my bank account, now I've bet with money I don't have. When it's regulated and at least you have to use a debit card and whatever, you're betting with cash that you have. And that's the way how casinos have always operated. So I think for that reason, it's good to have the sports gambling be regulated. But I think one could argue that the promotions and the advertising and the marketing of the gambling companies is now drawing people in to sports gambling that wouldn't have otherwise been doing that. I think it's one thing to say, hey, we're going to capitalize on this market of people that would be betting on these games anyway, right? Like if you look at the black market of sports gambling and say, okay, there was $1 billion bet last year. Why not make that billion into, at least get some tax revenue from it? Not, okay, let's take that billion, let's pump it up and turn it to 10 billion. Now we get all this extra tax revenue. And we've seen that in the past where, like they didn't outlaw cigarettes. They just made it to where, okay, now you don't see commercials for Marlboros. I can't be the only one that literally always has trouble saying that word. Maybe it's because I don't know, didn't grow up. Should have just said camels. You don't see commercials for camels, but you can still buy them. I mean, at least for now, I guess. I don't know how much longer that's going to be the case. But I think you will see some talks about that, and even if things don't go anywhere from a legal perspective in terms of congressmen, introducing bills or anything, I think just the chatter about it, like I think if there's like anti-gambling lobbyists and this and that, I think the chatter about it will be like a introduce risk, whereas it's been viewed on as the exact opposite for the past couple years, that, oh my God, this state it's now legal, this state gambling is legal, this state it's legal, where I think we might start to see that tide shift where now the conversation becomes, all right, have we gone too far too fast? Will there be drawbacks? So that is one thing long term I think I worry about with names like DraftKings, is I don't think it's gone. I'll just say I don't think the rollout's been perceived that well by the public. I see a lot of people complaining pretty consistently that, like, okay, every commercial now you're seeing when you watch a sports game is for, Caesars or DraftKings or MGM or, Barstool Sportsbook. And it's just like, how, do we really need... We get it, all right? Like, how much do you need? You get one app and it shows you, right? Like, I don't know why it needs to be a whole thing. Like, so anyway, I see our next guest hanging out backstage. We got Clinton Donnelly from Crypto Tax Audit. We are getting up to the busy season of taxes, of course. So we're going to bring Clinton on, talk about taxes when it comes to crypto. Without further ado, let's go ahead and give Clinton that very special Zinger Nation welcome. When we come back, we'll be talking about everyone's favorite topic, that is taxes. Mr. Donnelly, welcome to Benzinga Live. How are you doing on this Tuesday?
I'm doing great, Aaron. It's a pleasure to be here.
Awesome. I got you a little bit quiet right now. Let me, I'm going to turn up my headphones, but let's see if the audience has you a little bit quiet as well. Can we get another try?
How's my sound now?
A little bit better. All right. So before we get going, Clinton, you want to give us just a quick rundown of what Crypto Tax Audit is?
Crypto Tax Audit, we are a premier tax preparation firm for the crypto industry. So we've been preparing crypto tax returns since 2018. We do gain calculation, which is the calculating of your capital gains. We do that custom in-house. If you've ever been frustrated using one of the online, enjoy having a concierge, very large traders. We also offer a audit defense membership, which is totally unique in our industry. If you get selected by the IRS for an audit of your crypto reporting on any tax year, we will defend you at no additional charge through audit, through appeals, up to the tax court. I've done 40 audits for IRS crypto audits, and we have a tremendous success rate. 30% of them get refunds. We are the leaders in audit defense. So not only do we prepare a tax return, we actually defend it against the IRS, and we defend the gain calculations as well. That's kind of what we do. We have a company of 20 employees. We have lots of CPA agents, legal specialists, and a whole team. I should mention we've done 3,000 tax returns, and none of them have been audited by the IRS.
Got it. So I got your volume up a little bit better, but the audio is kind of clicking where you're going out every 5 seconds or so for a bit. So I got most of that. We got most of that. So we'll try to push through and continue. But if the issue persists, we can always have you try to hop back on or come on a different day. But I mean, I imagine I kind of alluded to it before you came on, but I imagine talking about capital gains and crypto gains taxes and whatnot. I don't think there were a lot of people that had gains in 2022, Clinton. as in terms of crypto?
Surprise. A lot of people, it depends on your type of trading. If you're kind of a hodler, buying, selling when it's high, you have tough. You have a lot of traders that they're shorting. They did a lot of money shorting doing.
Okay, yeah, we still are getting that audio. Sorry, I'm just trying to work on our end to get that audio. So Clinton, right now, I mean, what's like the first thing people need to know when they're doing taxes with crypto? Has there been any big changes in the tax code when it comes to crypto over the past few years?
Crypto with tax preparation.
Sorry, go ahead. I was going to say we didn't have you at all there, but then you cut in, and then we'll be good.
Okay. The most important thing is to know that the IRS has received significant funding from Congress. Tax crimes related to digital asset ownership. That's you and me. They are really cracking down. It's the #1 enforcement priority for the IRS. So that is important because we should all take real seriously that we're.
Sorry, Clinton. I did this audio issue. It seems like it's getting worse almost, where we're catching only like every other word right now. But here's what we'll do. If you want to try to hop off and hop back on a different mic setting or something right now, let's do it. If not, we can get you to come back on the show either tomorrow or Thursday or something, and we'll check beforehand on the audio there. Sorry about that.
Drop off real quickly.
All right. All right. Well, Clinton comes back. Let's check back in on the overall market real quick. S&P 500, or should I say the SPY index, which, all right, if you want to be a hardo and tell me that the SPY is not the S&P 500, it's just the ETF that tracks it, sure, fine. I'll admit that you're correct by technical terms, but I'll call you a nerd still. S&P 500 up, man, holy smokes. I mean, I don't know. It's not like crazy. It's not like, oh my God, we're up crazy high today, but we almost like they didn't want to say you're interfering. IRS is listening and interfering with the audio. That's funny, guys. You guys are funny. I don't know. I mean, it's literally more of the same, it seems like, right? Tech leading. You've got your Qs. You've got your beaten down tech, your beaten down names, your ARKs. ARKK up nearly 4% of the day. I mean, I don't know. Like, is there a new trend that is being established? Is tech now going to be our leader going forward? And we have the biggest tech earnings yet to come this week between Apple, Amazon, Meta, all coming. All right, let's get Clinton back on. By the way, before we get Clinton back on, let's just check how Bitcoin's doing. 23. I mean, look at this. Wow. Do you guys remember? It seems like so long ago when we were down at 15, and now we're back up to 23. All right. Let's get Clinton back on, see if we're working now.
All right. How's this sound?
Oh, my God. You sound a million times better.
All right. Very good. I'm glad. All right. Let's start over from the top if you like. That'd be great.
Yeah, let's do it. All right. So give me the quick rundown of what we need to know when it comes to crypto and taxes.
All right. So critical fact, last August, Congress funded the IRS with $46 billion specifically for enforcement of compliance for digital asset owners. That's you and me. $46 billion. That's 4 times the annual budget of the FBI. All right, just put that in context. How and why is that important to you as we prepare our taxes this year? It's important because we want to make sure that we're as thorough as possible, that we cover all the bases, because the IRS is continuing to increase its scrutiny even on past years.
Yeah, and I mean, I think a lot of people, I don't know, it seems like there's a correlation between people that gravitate toward crypto and people who are, maybe they have like an inherent like antitrust of the government, or maybe there are people that have actively like trying to dodge tax, for whatever reason. How does the IRS go about like making that harder? I mean, I would think a lot of people are in digital assets to have less of a paper trail, et cetera.
Well, there is a certain, tax avoidance, sort of anarchy touch to most crypto investors. But You know how there's the question on the tax return? It's on the first page right after the name and address that says, did you buy, sell, send, or have any financial interest in cryptocurrencies? Yes or no? So we know from the data that people have filed returns that roughly 8 million people checked yes. We also know from industry sources that there's roughly 30 million or more crypto owners in the US.
Wow.
So we're talking like 75% of crypto owners said no. All right. Now,
that's a great headline right there. Someone write that. One of my producers. Let's get that on a clip first of all, and then we'll get a headline out on this at later.
So this is how the IRS sees the crypto owners. 75% of them aren't reporting. All right. And they think of the 25% that are, they're probably doing it wrong and they're not reporting everything. That's your viewpoint. Now, granted, of that 75%, some of those are like, your mom, you gave her, a little Bitcoin and she has a Coinbase account and done nothing with it.
Not all of them have nefarious intentions of dodging taxes. Right.
So here's the problem IRS has had with criminal enforcement. And I've done 40 audit defenses of IRS before the IRS of cryptocurrency holders. So nobody's done as many as I have. Here's the issue. An audit is painstaking. You got to boil up, thousands of trade data, and it's just messy. It's ugly, and it takes years for them to actually resolve an audit. Alternatively, if they go after criminal enforcement, it's really quick and easy. So how does criminal enforcement work? They have to show that you knew about at least $10,000 of crypto income and you didn't report it. How do they know you didn't report it? Well, first of all, they prove that you moved the data and that you didn't report it in your tax return. Let me tell you a true story, Aaron. I had a client came to me after he signed a plea deal for tax evasion, and I had to prepare his tax returns for the last 4 years. Here's what happened to him. He had received a lot of Bitcoin from someone's private wallet, a lot of Bitcoin. This Bitcoin never appeared on a public exchange anywhere. One day, and he did not report this on his tax return back in 2016. One day, 2 IRS agents, the ones with the guns on their hips and the badges, showed up at his door. His wife answered it, and they asked to have a conversation with him. He got a couple lawyers, went down and talked to him. They asked him some questions. They said, "We're not through with you yet." What they ultimately did was they had somehow discovered his wallet address. He has no idea how they did this, and they dusted it with Satoshis. So as you know, when you trade Bitcoin, you pick up the UTXOs. Little Satoshis are just change you need to do an exact transaction. Every time he uses his wallet now, for the rest of his life, these Satoshis are following him around. The IRS could trace that. He got a phone call from a Department of Justice lawyer informing him that he was about to be indicted for tax evasion. And they sent him the indictment. At that point in time, it's game over. There's no audit. We don't have to prove how much money you made. They don't even have to prove whether you had millions or 10,000. All they have to do is prove that you failed to report it. You knew about it because he moved the cash, he moved the coins. And the way justice works in the U.S. when it comes to the criminal system is they hit you with as many crimes as possible until you're totally scared that you never want to go to jail. He ended up paying $250,000 and had a year in prison. He served 6 months of that.
Wow.
This is the most disturbing thing. I hope everybody gets that. This is a felony. When you have a felony, yeah, you serve 6 months, but you're a felon the rest of your life. He said it so eloquently. He said, "Clinton, if I get pulled over by the police for going a couple miles over the speed limit, they take my driver's license, they see I'm a felon. What do you think the odds are I'm going to get off with a warning the rest of his life?"
Yeah.
So this is a lot of people are playing with fire. But Aaron, as you well know, a lot of people started trading cryptos. They didn't know you had to pay taxes, and it went up. They didn't report it, didn't down. And next thing you know, a couple of years have passed and you don't want to report crypto because you didn't do it the prior years. So you're in this hole, this quicksand, just goes deeper and deeper. It's a very scary place.
Yeah, and I'm sure a lot of people went through that process. I don't know if any of your clients, people who made a lot of money on crypto, was probably like 18, 19-year-old kids who had no clue. They made all this money, pulled it all out, started spending it, whatever. And they're like, wait, taxes? What do you mean taxes? Like, whatever. And so, you have that. And then I think also, people that are, using crypto, I think a lot of people are drawn to it, like we said. Like they might have this kind of anti-government anarchy, whatever. There's people like that, but then also people that just like the fact that it is decentralized or whatever. And then it is kind of easy to you get on these different sites and you're buying this coin and transferring it to this and that and do all that. And I shouldn't say easy because there's obviously some processes and it's probably cumbersome for a lot of people, but you can do it. But then once you want to turn it into US dollars and get it to your bank account, it becomes a lot less decentralized. It becomes a lot more centralized, right? There's only certain exchanges, certain places you can then transfer, only certain coins you can transfer into USD and then pull it out to, and then boom, now you have that withdrawal from Coinbase or wherever to your bank. And it's all right, now that's, a little bit less untraceable now.
Very true. I mean, well, crypto blockchain is not anonymous. I mean, that's, Bitcoin is not anonymous. If you want something anonymous, you go to Monero and other privacy coins, Zcash. But one important concept for every investor to know in the States is this key concept is that whenever you dispose of a cryptocurrency, whether you sell it, exchange it for another one, move it, swap it for a stable coin, anytime you dispose of it, however you dispose of it, you're creating a taxable event and you're subject to tax on the gain from what you acquired that asset for. Now, at the end of the year, you got winners and losers. You add them all up, you have either a net gain or a net loss. But a lot of people think that you're only subject to tax when you go to fiat. That's not true. If I switch from Bitcoin to Ethereum, that's taxable. Maybe it's a loss, maybe it's a gain, but it's still a taxable event. So this is very important for everyone to be realizing that key.
Got it. Yeah, and the way I don't know. I think it would make sense from a tax perspective to say okay, if you have and I don't know how it works now. You might tell me right now, but say I had 10,000 worth of Bitcoin, and it's unrealized. Essentially, would you need to ever pay taxes on unrealized crypto, or is it only then if you take that into cash, then you would need to pay taxes on it?
Good question, Aaron. We use the word realized when I actually experienced the gain or loss. So just that it goes up or just that it went down, a lot of people feel like they've lost a lot of money, but they really haven't because they didn't sell. Or when it went up, they didn't realize the gain because they didn't actually sell it and make a profit. It's not until I sell it that I lock in or realize that gain or loss. So you're absolutely right, about what you just pointed out.
Got it. Well, Clinton, unfortunately, we're running out of time. We're coming up to 1 p.m., which is when we got to wrap up the show because we've got another one starting. But this has been a great discussion. I think a lot of people, like I said, never really even think about taxes when it comes to crypto. And we got to get you back on the show as we get closer to April, closer to tax day, and we'll revisit the conversation.
Well, that's a great topic. And I always say taxes are sexy.
All right. Well, you might be the only one saying that. Other people just say that they're certain. I know that's for sure.
Some people have bad sex.
Okay. Well, Clinton, enjoy the rest of your day. We'll chat soon. You want to come back on again sometime, next
I would love
month,
to.
maybe? All right.
I would love to. It's a great topic. Thanks.
Awesome. No problem. All right, you guys. That was Clinton with Crypto Tax Audit. I'll drop their website in the chat. Especially if I hope you guys don't need, I hope you guys don't get audited, essentially. That's the big thing. I hope you guys don't need the service from that. But if you've got questions, need some consultation, just have anything you need to know when it comes to taxes and your crypto trades, I watch you guys in the chat. I see what you guys are talking about. I know you guys were a little bit degenerate last year, with Dogecoin and some other crypto coins, some of the names I can't even say on the show. I can't even say out loud, but I saw you guys doing that. So you guys might need some services there. But all right, guys, hope y'all enjoyed the show today. Please smash the like. Without further ado, Money Mitch will be starting now.